Depending on what indicator you use, Bitcoin has officially entered a bear market. That is with a break and close below the 50 MA on the weekly chart. Has been a bear market indicator for 15 years with no exceptions. But maybe this time is different. Of course, it could be a fake out, but we could be entering a much, much deeper correction. Of course, we have James, Mike, and Dave to unpack all of that and everything that's happening in the macro, including a whole lot of insiders cashing out on their huge tech positions. We've got a lot to talk about today on Macro Monday. Let's go.
Let's go.
Uh-oh.
We don't, Scott, you're on mute.
You guys hear me? I was trying to do
Gotcha.
something and muted my mic. StreamYard is having a lot of glitching lately. We couldn't end the stream the other day. Anyways, welcome to the bear market. Dave, Mike, James, and Mike, you went all the way in yesterday with this one. Black Monday, November 17th, 2025, starting Sunday in cryptos. We definitely had a bit of a black Sunday, although it was just kind of a black few weeks. But what do you got for us here? You really think that we're going to see it all come crashing down today?
I certainly hope not, but it's the term I learned from you. I love that word, spidey senses, and if sometimes I feel it's my due. That's not the kind of thing I've ever put out. But when you sense major shifts in market, and it's my duty to warn people. And so we did see the collapse in cryptos again on Sunday, and they bounced. Bitcoin just dropped to unchanged in the year. Right now it's hovering around unchanged in the year. Our mark is right below 94,000 on Bloomberg. And let's just talk about what's happened this morning. The S&P 500 was up 1% for a while this morning, and now it's down 2 tenths of percent. And we've had, it's just the perfect storm set up for some post-inflation, deflation, or volatility into the end of the year. First of all, the key things are, now, the Bloomberg Galaxy Crypto Index ended down 10% on Friday, on the year, after being up 30%. So all that's kind of tilting lower. The space that was supposed to go up is going down. That's where markets really shift. And that's happening in an environment. The stock market volatility absolutely buried. You know, you have 120-day volatility running around 10%. If we end the year here, it'll be the lowest since like 2017. That's kind of a rare thing. So I'm worried that now that we've had this major, almost 2-month period of no data, where most people who really act, who aren't not just like bots and algorithms who trade cryptos, that's just more automatic, are waiting for this data to move. And everything's starting to tilt negative. Now, it's early. Certainly, the cryptos are showing problems. And this is happening with stock market volatility very low, gold going parabolic. And it's towards the end of the year. It's where, okay, you just look at the average for this year. The average price of Bitcoin is 103,000. So anybody who's bought it on average this year is losing money. Are you going to buy? Are the dip buyers going to win? Or are people going to be more hitting stops? I'm more sitting towards the latter, and I'm fearful. If we just get a, let's say maybe a 5% drop in the stock market, it's still a great year, up 10%. That means things like copper have a big problem, should go lower. Crude oil is already showing the deflation. Crypto is already showing the problem. Bond yields have been declining. Yes, they've picked up since the first Fed study news. So I'm really worried as we get towards the end of the year of a decent, I hate to say the word crash, but mean reversion can be a crash. 1987 was a mean reversion event. The stock market ended up 2% that year. So that's what I think is going to happen. I need to be dissuaded from that. I suspect Dave and James and you might help me. But right now, we have a bear market I think is accelerating in cryptos. And I think the problem is the dominoes are going to follow.
Yeah, I think since we have the title here, Bitcoin officially enters bear market. We have a lot of takes on what a bear market means. Hunter Horsley, the CEO of Bitwise, was going viral this weekend for saying he thinks we've basically been in a bear market for 6 months on Bitcoin. I mean, you take a look at the weekly chart, there's that break below the 50 MA on the weekly. Like I said, it's never closed below and not gone down and tested the 200, which is rising, but at 55 right now. Not saying that will happen. This time could be different, but this time has to be different at this point. And you could argue going back, I mean, this is this time last year. Bitcoin was the exact same price. We're down now in 2025 calendar year, if that is meaningful. But, and Mike, I think I asked you this on Market Mavericks along those way. People love to say that we're correlated, but gold's way up and stocks are way up and Bitcoin's actually flat with some volatility up and down. So looks wildly uncorrelated to me if we're talking about a few percent off the highs of gold and stocks. And here we are with Bitcoin completely flat or down, right?
Yeah, so it's what happens towards the end of the year. And I obviously guilty, was wrong, was early, but I got that sense that gold was the place to be last year. And now the same signals, I was similar. It's just those things you get. We've been in the markets for a long time. You sense extremes and see them. I get the same thing in gold now. That's why I think everything is just bad. That's why I look over to good old treasuries is, the one I've been most wrong on. But if we just get some normal, just a 5% backup in the stock market, the bottom is, it's completely, the in and out burden has to go up now. I even look at that in things like copper and crude oil and natural gas and bond yields. The stock market has to have, and certainly cryptos, it has to go up, or we're going to just get this continued tilt down. And that's why, this week and next week, as we get into the holiday, I just remember having P's and L's that would have major flips this time of year. And I used to have hair too. Sometimes it can get kind of nasty.
So the danger of using 3, 4, 5 data points when trying to make a statistical analysis is not about this time is different. This time is different is when you have something that has hundreds or thousands of data points and expect it to be different the next time. So I'm sorry, but there's not. And look, I've tested every one of these technical signals, over 10 years of running prop trading, prop trading on the quantitative side, and not a single one of them has statistical significance. Yes, they are guideposts in terms of human behaviors, and that's what you're seeing. But you have to understand, we keep focusing on Bitcoin, but if you want to look at the person, and everyone's saying that Saylor should be panicking, and if we watched Grant's interview with Saylor, he looked like the opposite of panicking. I don't think he gives a F.
I think he loves it.
And thinks he has the asset.
He wants to buy it
you
lower.
Either you believe it or you don't, and that's going to be a really interesting. That either you believe adoption will continue to accelerate, and by the way, outside of price, the metrics do show that, so that's okay.
For the record, quickly, not to interrupt you, Dave, but I want to point out that last week there was legitimate FUD going around Twitter that Michael Saylor and Strategy were selling because some wallets had moved tokens.
Honestly,
and that actually went viral, and he bought 835 million more while that was happening.
Here's the deal. If the Carolyn fam is going to need to sick the CFTC on this, because honestly, if that was done in the stock market, I guarantee you that whoever did it would be up for and looked at for manipulation. And I think that was true. And there's been a lot of that. It's accelerated, and generally FUD accelerates towards the bottom, but not the apex, V bottom. Not the Pico bottom, as you might want to call it, but you see an acceleration of FUD as bottoms are happening. It always happens, and we'll talk about that later. But I do want to make the point that if there's one human being who should have sweat on his brow, it's Tom Lee, because Bitcoin is still, middle of its range from its bounce from the tariff tantrum to now. Ether is below that level.
I don't think Tom cares.
Well, whatever. I'm just saying, well, then his investors should care, because
it was either last week, like 10 days ago, he was calling for 9,000 to 12,000 or 8,000 to 10,000 ETH by New Year's.
The Ethereum, the bottom, I guess, that's 22.
Didn't we have Raul?
I'm wrong. The bottom of the tariff tantrum was 1,600. So it's done a 50% retracement, because it went from 1,600 to 4,600, and now it's just above 3,100. So it's down a significant amount. And it's if you look at what people consider levels, if it fails 3,000, the question is what's going on there. And if you think Ether is bad, look at then you start going down into more and more into the altcoin season, and you see absolute cataclysms. You see things that happen in crypto winters, right?
There was only a bear market there, and it's been there for since
that is correct. So whenever Mike talks about the Galaxy, Bloomberg Crypto Index, which is a little bit old and long in the tooth in its construction, but still, when you look at it, you're talking about most of the components are undeniably in a bear market, have been in a bear market with a couple of blips for most of 25. You had the rip in Ether, and from a very specific liquidity drive. And so you see that, but that's not really the point. The point here is the fear, the FUD, the selling is crescendoed. And we know that that's true. The other point, and it's a very simple one, and I titled my relight of the stream, buy and when they're crying. This is a crying, but On the other hand, if you look at what's happened with the stock market, I agree with Mike. I mean, one of the things I always look at is insider selling, and insider selling in the stock market is extremely high. The difference is people are still buying stock, so the insiders are selling, and there's retail that they can dump on. In Bitcoin, the OGs were selling, and you could claim that they're insiders, although I think in there it's more of a political and or lifestyle shift. And they, it eventually ran out. The demand was overwhelmed, not by a lot, but by a little, and that's why it broke below 100,000. That's why it's kind of sitting in this very tight range over the last few days, because it's really a question of even James's partner came out and made a comment that he's raising cash. And we don't know if he's selling Bitcoin to get to his cash. I have no idea. But when you start seeing people like the big print Larry saying that, that's definitely closer to a bottom than the top as well. That's that old word capitulation coming in. Now, honestly, it always makes sense to have cash if you're a trading firm, because you always want to look for the extreme opportunities to goose your performance. But that's a different story. Anyway, I'd love to hear James's thought on that. But before we leave, and you didn't do the morning meeting, I am really curious about what you guys are looking at in Japan, because Japan had two things going on. We have a massive stimulus package announced, not surprising, but at the same time, we're ticking levels on dollar yen and JGBs that should be panicking the carry trade folks, people who are borrowing in yen in order to fund their trades elsewhere. I'm curious. I mean, I haven't heard the word carry trade over the weekend, and I'm looking at the numbers, and it seems strange to me. So what are you guys thinking about that?
Let's go to James first, and I can reiterate, because I think it's James' turn.
Well, I mean, look, I tell you what, Mike, what did they say in the morning meeting? And then because that kind of frames up everything that we're looking at this morning.
Okay, so I'll start with Dave nailed it. Our FX strategy, Aldrich Shield Freedom, focused only on the yen. Point out the path of the resistance is further weakening the yen. Point out the macro policies favor weakening the yen, and also this flare up in China. So she's pointing out that might see more weakening in the yen, which obviously means more carry trade. So Anna pointed out that payrolls, we're going to get the September number. She thinks it might see 54K, but it's edging towards 4.4% unemployment. The key thing she pointed out is small business estimates were improving in September. She said the pure home-based forecast might actually be boosting up a little bit, and she says the chances from this number to make the Fed lead towards an ease, which is all tilting now to less than 50%, is unlikely from this report. And then she dug into that. We're going to see the FOMC minutes, and from the last meeting where Powell turned hawkish. She fully expects it. You're going to see several officials backing him up, and some actually turning towards tightening. And she gave the example of looking back at some of those minutes in 1995. We had a similar situation. Greenspan tilted the bias towards easing, partly because he saw the pretty significant productivity improvement. Nailed to him. She doesn't expect Powell to do that. And then just from IRA Jersey, our our interest rate strategist point out the market expecting the Fed to cut at a slower pace, and he disagrees. Right now, it's less than 50% for December. He thinks it's too low. The front end, bit of a tightness in funding markets, which he thinks is part of the reason when we stopped the QE. And he pointed out Bessent said it's going to take a long while to increase coupon issuance, but he does fully expect that the Fed will be cutting at a greater pace than what's currently priced in. He says we're not priced for a full 25 full cut until March at the moment. And then our equity strategists point out there's still quite bullish trends and things like that in equities. That was Michael Casper.
Interesting. So we're not going to get the unemployment rate, right? Because that apparently can't be calculated.
So can't be presented.
I mean,
I think it's hard. You divide numbers. It's tough.
It's really difficult.
It's pretty. If you just come back and pull all the way out, the most important thing to realize is that the markets hate what? Uncertainty. They hate uncertainty. And if the markets hate uncertainty, they go to cash. They get liquidity. They need to take some exposure off the table. And by and large, we're seeing a massive amount of exposure being taken off the table in cryptos, in Bitcoin and the other, whatever is not Bitcoin. So that's not surprising at all. What is surprising is that, we had a lot of chatter last week about, problems with the sheer amount of I guess the multiples that are in these AI stocks and the exposures in the AI stocks. And then you had Michael Burry come out, and I'm not sure, we didn't talk about this last week,
He
right?
shorted heavily, then closed his hedge fund. What?
He closed his hedge fund. Now, it's unclear whether he just closed it and he's just managing his own money and he just doesn't want to hear the noise like last time, because remember, he almost got liquidated last time. Like, he was right up against the edge, and he just may not want to hear it. He thinks the markets are irrational and they're not making sense, and so he doesn't want to hear it. He's going to do his own trade and get away from the noise, and that's probably smart for him. Then you had all the articles about the incestuous revenue counting inside the OpenAI and NVIDIA networks, and whether or not that is a problem. It's difficult to pull apart. Are we looking at, and so this is on people's minds in the market, and it's on institutions' minds in the market. And you saw some of this in the price action last week in stocks, which was, hey, do we have a problem here that's looking like Enron 2.0? Now, I don't think we do. That's my personal opinion, but I have not dug deeply enough to give a fully informed opinion on it. I want to make that clear. I am not exposed to that stuff except tangentially because of the hedge fund that I run, and the assets that we have are exposed to that in some beta, and because of the way that the market moves and how these things are correlated. But especially things like the energy stocks, and they used to be called Bitcoin miners, right? So, but
once upon a time,
until Mike Alfred got involved. But if you're looking at Bitcoin and wondering what the heck is going on, it's not rocket science to see this have risk taken off the table on the weekend in a name like Bitcoin, because there's large holding in it, and you can raise a lot of liquidity in it really quickly at a time when the rest of the markets are closed, like nothing's open, and Bitcoin's trading all weekend. It's not a surprise. So it's nothing that we haven't seen before. To Mike's point, look, Bitcoin has drawn down 25% from the peak already. And does that shock me? No, of course not. We've said it could draw back to 100,000. Now that it's under 100,000, that's a little bit surprising for this time of year. But again, like Dave said, it's not surprising for people to be doing window dressing and moving their portfolios around this time of year. It would be surprising if they weren't. So that's just the way that Wall Street operates. I guess what really does surprise me more is, and I didn't expect quite this, the sheer amount of selling we've been seeing, is just the absolute massive amount of old coin selling. The OGs are they are dumping and dumping and dumping. And you can say what you want. Maybe they're moving wallets. They're not. You rationalize in any way you want. It's an IPO. It's like it's like the post IPO activity where the first players get out. You can say whatever you want. The reality is they're cashing in, and they're going to cash and yachts is what they're doing. And again, I will reiterate, I don't blame them. I mean, if you've held on for this long and you've done this well and you've become a billionaire from holding 1,000 coins, God bless you, And
people have to remember this, for some of these guys, this is 10, 20, 30% of their coins. You can't make the assumption that they're unloading everything. A lot of these guys are literally driving Toyota Corollas, living in a 1-bedroom apartment, and are finally thinking, hey, it's been 15 years. Let's
Yeah,
go.
I
I
don't
said this to
blame
Matt Hogan yesterday, though, and I've said it repeatedly, James, is just exactly what you did. I'm surprised they have so much, and I'm surprised they continue to just keep going. It's just
unload,
never
unload, unload.
ceases
And I
to
think
amaze me how much supply there is in the market.
I honestly think that, and look, they were far more sophisticated in their understanding of Bitcoin than I ever was. But I would guess that a lot of them are not sophisticated investors and are just like, I want to now get out. I've held on this long, and they've done better than any Wall Street, executive in the history of Wall Street. And so well done. But I think a lot of them had in their mind 100,000. They're going to ride this cycle as far as they can. And they think, well, it's a 4-year cycle. It's over. It hit 125. It's done. And I'm going to cash out anywhere between 100 and 125,000 is good enough for me because I've made $1 billion, whatever it is. The second thing is, and this is the crucial point, and this is what's really critical to what Mike is talking about, is and to put an accent on Dave's point, which is we have 3 or 4 data points in Bitcoin. Like literally, we can't just keep looking at these charts and saying, oh, it's a 4-year cycle. The 4-year cycle in my mind is dead. I don't see this under a 4-year cycle anymore. It's not driven by the halving and the reward that's coming from mining anymore. It just doesn't make any sense. That does not make sense to me. What does make sense is it to be on more of a 4-year cycle because of political noise or adoption or political hate. That it does make sense to me. Antagonism from the Biden administration was real. The adoption from the Trump administration, well, we saw a large benefit from that right after the election that we've talked about. Went from 65,000 to 100,000 in a nanosecond. And so we have seen it gone up 50% from that. Real support from Trump administration. Well, you're seeing it behind the scenes because of things like a lot of different things have happened on the regulatory front, which have been positive. It's not from Trump. It's from the whole, Republican, Congress and all of that, and more support in the conservative side. So you're going to start seeing banks adopting it like we've been seeing. JP Morgan is doing, they're coming up with products and lending products and collateralized products, and other banks are following suit, Morgan Stanley, and you're going to start seeing more and more and more banks doing this. Have we seen the benefit in the price? No. We saw the benefit in the price from ETFs and a lot of adoption from smaller institutions. We just saw that it's the IBIT is one of, if not the largest single position that Harvard owns, the Harvard Endowment. That's a big deal. That's not like we can't just ignore these things. But what is surprising with all of that positive momentum and all of the positive developments, again, is just the sheer amount of selling that's coming from the old coins. And until that's done, we're going to continue like this.
Yeah, there being some big outflows from those digital asset products as
So
well.
do the math.
Route trains.
You got it. We got to do some math for Bitcoin to become the to replace gold, or at least make inroads on gold. Gold is held incredibly widely, right? Gold is held by central banks. Gold is held by pools of capital. Gold is held by individuals. It's the way for wealth building in India, via whatever gold. But gold is in the financial system. Bitcoin was 70% in the hands of a bunch of people who were outside the financial system, several years ago. Until that number shrinks to 10, 15, 20%, Bitcoin can't approach gold. It literally can't. The numbers don't work. And so you need to have distribution phases. We did see a fairly sizable distribution phase in 2021, or is it 2022? I get confused. After Paul Tudor Jones made his point, around 10,000, there was a very sizable distribution phase where the market Paul Tudor Jones said this. Other hedge funds started talking about it. People like me managed to finally get my retirement fund put into Bitcoin. And from the day that he made his statement, for 5 months, it did nothing. It dropped a little below, it went a little above, it dropped a little below, it stayed there. And 5-6 months later, it started that epic run. And it started very slowly on the epic run. It went from 10,000 to 12 to 14,000, over a couple of months. And then, the selling stopped completely, and whoosh, we saw massive exuberance at the end of that. A huge speculative, impulse, kind of the same thing we saw with silver over the last, over the summer. And, the difference is there was just less selling. Once the selling stopped and people say, oh, you know what, I'm going to wait for the next round number, which is 100,000. All of a sudden there was no coins, whoosh. Now, am I saying that's going to repeat? Yes, it's going to repeat. Is it going to look exactly the same? No, of course not. But you're in that period. The difference is 100,000 is a really meaningful number because it effectively sets people up for life as opposed to making them feel happy. There's a difference. So if you owned 1,000 Bitcoin at 10,000, that's a lot of money. But at 100,000, that's game over. I don't have to work again.
And to be clear, I've heard from a few OGs that have sold because, and not Larry, but I have heard from few OGs who have sold, and their answer is, I want to have I want to be able to live, to exist in the next 2 years without losing sleep and knowing that I've at least secured my family's future.
Exactly.
That's it.
For 50 generations. Yeah.
Right. But
for generations.
Although they'll blow it in the second generation.
Generational wealth.
But
right?
it doesn't. But the thing that matters is that there is a group of those people who that's true, and there's a group of those people who say, "Why can't we be the next Jeff Bezos? Why can't we be the next Uber? Whatever." And they'll hold out for $1 million. And look, markets are complicated, but the point is when you look
Bezos
at
didn't
it,
do it by holding something. He did it by building something. But yeah.
building and being, when you take a financial risk and you with significant conviction, and yes, you're right, you can most people would cash out. I mean, I don't know about you, Mike, but when I buy something that's speculative and it goes crazy, I sell 25. I generally, my first reaction is always, it hasn't been in all cases,
play with the house's money.
Well, that's what Mike has been saying that all along. He's saying, like, just take some off the table,
right?
Gold.
So, but the thing that I'm trying to get at here is what is funny is the stories. So all like the whole Zcash narrative, and I had a whole conversation with Donish about this yesterday because I jumped on the coffee with Donish thing, and we had some fun this weekend, just chatting among a few of us, but with like 800 or 900 people watching, it was kind of amusing. But the interesting thing is, when you look at it, the narratives from a lot of the OGs are like, oh, well, it's Simon Dixon. Now, Simon and I don't see eye to eye on a lot of things. We do see on others. But when he says, well, BlackRock having IBIT means that it's captured by the financial system, which means Bitcoin isn't what I thought it was. Well, what did you think? How do you think you're going to get Bitcoin?
That is a very important point, is that someone like that's been captured by Wall Street. It's not the freedom.
Can't go around it.
That self-sovereign money that we thought it was going to be.
Except
you can't go around it. You got to go through it. Like, there's no path to global adoption without
exactly. That's right. But the point is that
that's been my point all along. Yeah.
What matters to those people, and I will keep saying it, is yes, as long as it is an option, and there are places like Britain that are talking about banning self-custody, or the UK or Europe, which is kind of insane, but they're going to try. I don't know how you're actually going to do it, but the truth is, as long as it is an option to be self-sovereign, as long as on-demand settlement, which in everything out of our SEC, everything out of our government, has always been a feature of every single attempt at legislation. The fact is, as long as you have the ability to hold it yourself and it's portable, you haven't lost anything by having others.
They'll make it near impossible. They'll make it near impossible. And the way they'll do that is that Europe is they're already going down this road. They're going to regulate every single app that's on your phone. They're gonna regulate every single rail that you have from a financial system into exchanges, and they're gonna say that they're gonna limit either the amount you can hold, the amount you can spend, or where you hold it, how you hold it, and it's got to be on exchange. Like
That has nothing
they're
to do
literally
with
talking about if you want to
James.
have it-
You can go on the rant, but focus on the fact, differentiate why or how could you have any crypto asset or any asset that would do better job than Bitcoin at self-sovereignty in that scenario.
I agree 100%. I'm just saying they'll make it very difficult. The barrier to getting it'll be like going into in 2010 or 2010 where you're going into a parking lot with a suitcase of cash to get Bitcoin on a thumb drive.
Well,
I've been there.
Yeah, it wasn't a suitcase in
That's
2010.
where they're headed. That's all I'm saying.
Yeah, you'll end up with Europe is a very slippery slope. You'll end up with a black market, right? You'll end up with all sorts of stuff. But you notice that
that's not a bear
Japan
case for Bitcoin. I'm saying it's a bear case for Europeans.
Yes, exactly. It's not about Bitcoin. But the point about the OGs is what's happening in the United States is it's an option. There is no, let's be very clear here. There is zero, and I mean zero chance that some people will ever trust or do self-custody because they don't trust themselves. They're too sloppy. They don't have the technology. They're going to want a trusted intermediary.
Of course.
Gold you can hold in a necklace. Try selling gold in size and using it for something. You're not walking with gold shavings to a store these days.
Let's get back to like the macro, because this is what the macro show is, not just about Bitcoin.
Yeah. We really do need to talk about Japan. You're right.
But
there's a lot to talk
there's a couple
about.
things. Like we need to talk about the fact that you had a slew of Fed governors come out last week and absolute, like they could not be more hawkish, saying that we're not having a rate cut in December. And to Mike's point, that's got the market more than split now. Now you've got the probability went from 70% of a rate cut using Fed fund futures now to 41%. It was at 69% just a week and a half ago. And, 2 weeks ago, before the Fed meeting, it was at 67%, So here we are, This is we have a lot of uncertainty in the market trying to figure out what rates are going to be and just how hawkish the Fed is going to be. At the same time, you came off the back end of a really sloppy repo market at the end of the month last month. So that's got people a little bit jittery and wondering just how much liquidity is out there.
Wasn't there a crap auction last week too?
It wasn't terrible. It was just another not great, but here's the thing that you do have, and this is really important. The government's reopening. You've got over $100 billion, probably closer to $150 billion that's sitting there in the Treasury General account that has just been locked up for months now, over a month. That the Treasury General account is supposed to be at $850 billion, and right now it's bumping up against $1 trillion. So yeah, I did write about that last week. Yeah. So this is liquidity that's coming, and you could see the markets needing more liquidity in like, let me share this, Scott.
You tweeted about this.
I tweeted about that.
Well, yeah, do you really believe the government's going to curb spending? The Fed's going to stop printing, and asset prices are going to stop rising forever? Yeah,
exactly. But here's if you just share this is the SOFR spread, right? So this is the overnight lending spread. This is a secured overnight, repo rate, basically, right? So it's a funding rate, SOFR, secured overnight funding rate, which means that if you're a financial institution and you've got treasuries that you need cash, you can go ask your buddy, hey, can I borrow some cash and I'll give you my treasuries overnight, and they'll give you a rate to do that. Typically it's right on the Fed funds rate. You could see right here, it's typically right about the Fed funds rate or a little bit below. Why would it be below? Because you're giving them treasuries. So it's secured. It's not like an unsecured loan, so, but you're seeing here that this has gotten a little bit more volatile going into the end of 2025. And now you can see that the trend is higher, that the rate is going up, that people are charging each other. There used to be a really big stigma to go into the overnight window because it meant that you were illiquid. It's like using your Visa card to,
pay off your MasterCard.
Yeah, basically. Well, it's like using your Visa card to pay your auto loan, like taking a cash advance from your Visa card to pay your auto loan. It's like, that's not a great move. That's kind of the way it used to be looked at in Wall Street, and Dave and Mike know what I'm talking about. It's like, you didn't want to go the overnight window. It had a bad stigma to it. But now you've got this thing, you've got the standing repo facility that the Fed created. And they're like, nah, come get some cash anytime you need it so you can keep the liquidity there. But banks are still reluctant to do it. They're borrowing from each other. But the funny thing is, reserves are going down. It's getting a little bit tight. And and people are nervous about this too, right here. And so if they're nervous about this, it doesn't surprise me that they're selling assets they can get their hands some cash from that have been quite volatile over their life. Something like Bitcoin doesn't surprise me at all.
So James, two questions, and they're questions. Question number one, it has been asserted by a few people that there have been lots of emergency meetings. And and so they're pointing to stresses, or they think that there's something underneath the surface that we don't ever see. I never believe conspiracy theories. I'm curious what your take on that is.
I saw that from the Financial Times. Until I see it from a reputable source, I don't.
But I agree with you about the Financial Times.
I don't consider the Financial Times a reputable source anymore.
No, it used to be.
So if I haven't heard in my circles that there's massive like anybody's running around with their head cut off like they did back in long-term capital management kind of thing, or back in the repo crisis. I'm not hearing that stuff. Okay. Is it possible? Sure. Maybe it's quiet, that they're just quietly meeting, but I don't think these are like,
let's
this
ask.
isn't like a mid
question.
meeting. Oh, let's start QE tomorrow kind of meeting is not what I'm hearing.
I'm asking to this. No, I understand that, but swap lines to Tokyo, on the other hand, is a different question. So with the JGBs definitively breaking above that, the where are we? Let's get it exactly. Where are we right now? Bonds. Sorry, I'm just trying to get to here we are.
Yeah, exactly.
Definitively the JGB, over 1.7. It wasn't all that long ago that we said if it gets over 1.6, that people are going to start panicking on the carry trade, right? And the carry trade hasn't vanished. There's still an absolute ton of Japanese liquidity. People
we got to get Mike in here on Japan.
Yeah, sure. Exactly. As I keep asking, I want to know, why is it that nobody's covering this today when the JGBs are now a full 10 basis points above what used to be considered a critical level?
Great thread on that. Yeah.
I guess I'm jaded by JGBs. The question here was, I was on live TV a couple of years ago. I said JGB, and the young anchor did not know what I was talking about versus those of us. Yeah, I figured it'd make you laugh. I mean, because for those of us, 30, 40 years ago, this was everything. And now it's just such a saturated part of markets. Yeah, the carry trade, Mike, I get it. I just don't know how it makes much of a difference anymore. I'm more focused on really, okay, there's obviously volatility going on in Japan, and now we're having issues with China. To me, it's that, we still have that 10-year note yield in the JGB at 7.2, but in China, it's been one of the biggest bull markets the last 5 years, is that 10-year note yield at 1.8. And I just think of ways what's going to stop it from going there. So I definitely want to go there, but I'd like to show you a few charts if I can to rope in what I'm thinking on the macro with, if you can link this, Scott, with everything you're talking about. First, we talked about, we're down to 43%. James, you mentioned that for the next cut. But it's one key thing. Remember then the Fed cut in September? We looked at the September Fed funds a year out. It was at 3%. Now it's 3.17. So what's happening? The Fed cut. It cut twice, and bond yields are going up. Duh, guys, sorry, it's wrong. You're not supposed to be cutting rates. Market's telling them that. So we got to go out to, you got to go out to way into next year, like June, April, to get 3%. And then it starts going up again. That's the problem. It's the lose-lose. Stock market's telling you can't cut anymore. Cryptos might be a problem, but I want to tilt over the key thing, the macro things that have really got me scared. And this is a chart. I can go back 50 years. If you take the S&P 500 divided by GDP, divided by the MSCI World UX Index, and divided by gold. It's all the same chart, and gold versus gold, it leads. But gold's breaking down. It's breaking down through this key support. And this is why I like to point out, okay, so you might say versus GDP doesn't really matter. Yeah, it's old, it's antiquated. But versus the rest of the world, they all might just be reverting a little. Just a little reversion is what I'm worried about, just starting to kick in the next few months. And what is the same chart of that? It's Bitcoin to gold. It's the same thing. The key thing is this thing has never gone up when volatility is this low. You got, it's just the way it works. Maybe it's different this time. Every time we get volatility this low, the Bitcoin gold goes down. And of course, our model shows it should be at 13 when it's at 25 and 23. It's just heading that way. So I'll end with one key chart that really struck me. And when we did an X Spaces on Friday, and CJ was pointing out how bullish he was because of the chart and Bitcoin, I just look at an annual chart in Bitcoin. It's just on the cusp of going down. What stops it from going to 50,000? Nothing. It's just meh. It's not a big deal. That's when I'd like to maybe get re-bullish again, and maybe some other reason. It's just if, you know, you take out some of the speculative excesses, you flush it out, and that's what Bitcoin always does, and then it resets. But right now, I don't see a stop in the macro until things tilt over, and Bitcoin's leading way until it maybe gets back to 50, and we just start this green on the year. If it starts turning red, I don't know what stops it now.
But
you have to have a structural event for it to go to 50.
Why?
Well, forget that. Let's first of all, it's the denominator. I don't want to go down that road. You said something that's the most important point that is actually happening, and to not acknowledge that is problematic. You said we need to flush speculative excesses. It's not done. Don't get me wrong, not done. But if you go through CoinMarketCap and you start looking at the speculative excesses that were in actually potentially good coins that people like, the sizes are down. I mean, just over the last 30 days, you're talking 20-30% corrections in a slew of assets.
In a 5-year
just
bear
over the
market.
last 30 days, and over the last 60 or 70 days, you're talking 50, 60, 70% down. You are seeing a huge flush in speculative excesses, while Bitcoin is down 20% from its all-time highs. These things are down 50 to 70% in many cases from not all-time highs, from intermediate
Last
highs
month.
and whatever. So you're seeing a lot of speculative excess. You're seeing the crypto community effectively pull themselves into a turtle shell and not buying. So you ask yourself, who's selling? I don't think there's a lot of selling right now, except for people taking profit, traders taking profits. I don't think that the OGs are selling at these levels. It's just not what you're seeing. What you're seeing is the crypto community isn't buying. The only people who are buying are people who look more like us, and that is focused on Bitcoin and a little, to some degree, in Ethereum. You don't see, people in institutions running into Hyperliquid, even though Hyperliquid has some pretty good fundamentals. You don't see them running into SUI. You don't see them into whatever BitTensor.
Those people got liquidated on October 10th as well. So
that's right. There was
there's a million of those people who are no longer in the market who would
exactly. So there was a massive excess flush that happened, and now we're seeing the after effects of that. In order to get another alt season cycle, you need to see a serious bull market of new money into it, and you may never see it. You may never see Fartcoin go to $1 billion again. You may never.
Oh, darn.
I actually hope it doesn't happen. But to say that there hasn't been. Now, as far as Bitcoin and 50,000, whatever numbers you're picking, you're actually, right now, you are at one of the most stretched points it's ever been where are we? One of the most stretched points it's ever been. The most stretched it ever was. It's pretty close to now. It was on September of 23. At Bitcoin was sitting at 25,000 compared to the Bitcoin network, might have been the most stretched on the downside relative to hash rate, but it's pretty close to where we are now. And I'm just going to say that that's just reality. The hash rate's continuing to churn higher. there continues to be adoption. You can't ignore adoption metrics when you're talking about an asset that, I haven't said in a few weeks, is essentially an option on its adoption.
Future adoption, its own future adoption. You got to quote
That's right.
yourself right.
So as long as that is your, until that model is broken, you have to assume it's still there. Now, there are some lunatics out there that talk about S curves and power laws, which say, well, it should be whatever. You can say whatever you want. We are right now somewhere in the neighborhood of 30% below where you would think that model would say it's worth. It was 35% low in September of 23. You can't ignore that. That doesn't exist in any other crypto. There are some that have real cash flows. I mean, you could argue, and that get distributed like BNB. As long as Binance is healthy and doing well, you can make that argument. But that's done very well. And yes, it's fallen in line with everything else, but it still looks healthy. But you can't. The problem with looking at crypto as 21 million or hell, even 200, I would go so far as to say at 10, is you have to distinguish between the fundamentals. And there are fundamentals.
Or you can just say Bitcoin and everything else.
What'd you say?
Or just say Bitcoin and everything else to varying degrees.
Many times.
I gotta follow up on that one, Dave. It's the few little lessons I learned was, number one was for this one was just translate, praise that Bitcoin God, I say pass the ammunition because it's going down. And then another thing I learned from Charlie D. Francesca. Charlie D. Some of you might remember him. He was in the first Market Wizards. I remember him from the trading pits. His key quote was, "All that matters is what's on your statement." Now we get the statements real time. That's before the statement. I'm just telling you that this asset's going down. It's going to continue to go down. It might go down a real lot. The whole space, which is like the total market cap of Shiba Inu and Dogecoin, is still $30 billion. You can take that down to $30. Let's flush it out. To me, this is what the process starting. So I'm looking at now, I'm putting in that inflection point here. Now, obviously, any type of crypto, just to recover, you need the stock market to go up first. Now, I'm pointing out, we might just have that 5% drop into the year end. And that's the thing is just getting started. That's my fear is this but is. Listen,
so if you go down the 5-year chart and that's what's telling you Bitcoin should be at 50, since the money supply is essentially doubled in that period of time, why is that not relevant when that
because there was one cryptocurrency in 2009. Now there's 27 million. There's unlimited supply of these things. I know you say it's different.
We not have the same debate again. We got to point out that's what's happening.
So I'll point out one thing. So I appreciate the pushback on the Bloomberg Galaxy Crypto Index. You should push back on it, partly because I'm biased because I helped create it. The thing I like about it is part of what you created is its market cap. It's top 12, but it caps at 35%. So that means it's 70% Bitcoin, Ethereum. Almost every other index is not market cap. The one I have right next to it is the Market Vectors and 100 index. It does not cap its market cap, which means about 70% is Bitcoin. So why bother?
I mean, because Bitcoin is a different asset than the rest of crypto. That's the answer. That's the short answer,
guys. I don't think we're ever sorting this one. And
no, we are.
In the next 10 minutes. Look, I want to talk about one more thing specifically. Okay, James, go ahead. And then
the point I was trying to get to before all of this was that we're not on a 4-year cycle anymore. Dave, I appreciate the hash rate, differential because that is a good point. But let's face it, Bitcoin is the leading barometer for global liquidity. There's just nothing has been like it. It's been the tip of it for a long time here, for many years. You just study Michael Howell's reports and understand how and why that works. And so what Mike says is absolutely true that we could have a market drawdown here. Whether or not Bitcoin has already front run that or will go down with it another 10%, 15% because of it, up to debate.
Yeah.
Whether
Dave
or not
said that to me before the show. He said smart money would be selling stocks to buy Bitcoin here to exactly that example. But go ahead.
Exactly the point. Insider selling of stocks is very, very high.
That's right.
And that's always a really good indicator. But I do want to make one point on the stock market that's important.
Yeah.
There are lots of people making an absolutely horrendously bad analogy. Actually, there's two hugely bad analogies that are being made. Okay. The two are comparing what's going on in various companies to Enron and comparing various companies going on to Global Crossing and WorldCom. Okay, they're terrible analogies, and I will tell you why. Enron was fraud, pure and simple.
Straight up.
If there's fraud in any of the Mag 7 or any of the high flyers, yeah, they're going to get crushed.
Hold on to that for a second. The reason that Wall Street and hedge funds got nervous last week was because of that interview that Sam Altman did that completely dismissed any questions about revenue without and just what's his name, who was
Gershner. He said, tell me your shares.
Yeah, Gershner, Gershner was interviewing. He said, look, I've got a million people lining up who want my stock. The reason that hit a note they hit a raw note for investors who have been around the block, who remember this, who were sitting at their desk when they had the Enron call on. And Jeff Skilling, he responded to an analyst question with, "Listen, you little asshole." And you could like the entire street went silent. Everybody was like,
I remember.
And Enron just started like we're like, do you remember? My hedge fund manager at the time,
very fair point. But
my hedge fund manager at the time looked across the desk and said, "Do we have any exposure in the book to Enron anywhere? Get it off get it out now." You could see it selling in real time it was nuts. So
that's true.
And that was the same feeling that I got watching that interview.
No, that's a very fair point, James.
You want to know the corollary, the one that everybody here will remember, is when CZ tweeted about FTT token and Carolyn Ellison went on Twitter and said, "I'll buy it all from you for $22."
Right. Exactly.
Yeah. Oh yeah, you're right. So, but the difference is this is Sam Altman in a private company. Yes. And the question of how much of their CapEx is locked in and how much of their CapEx is in the price. So if OpenAI
when you answer a question with, "We've done the research and we see a lot of revenue," that's not an answer.
Right. But here's the difference. XAI, the various Chinese companies, Google, and Microsoft aren't making those statements.
Okay, well, there's something I want to talk about with
this is a big deal, right, what you just said.
Because this is important when we're talking about risk or risk on and risk off and where the market's heading. Peter Thiel dumped his entire NVIDIA position worth over 100 million. He also sold, I believe, 75% of all of his Tesla. Bill Gates Foundation sold 65% of their Microsoft last time I checked. That was his company. So for 8.8 billion. But on the flip side, Mr. Cash himself, Warren Buffett, bought Google.
Right, bought Google. So here's the thing: is for NVIDIA and OpenAI, the problem is the perception and the sheer amount of complexity around these special purpose vehicles that people don't understand. They're like, "Wait, this revenue's coming from that revenue. Like, how is that working? Is it double counting the revenue? How's this working?" And to not answer the question is the problem.
Right,
and that's but what happened back with Enron. It's effectively what happened on the street that day when he said, "Listen, you little asshole," rather than actually answering the question. And that was the end of Enron. That would literally mark the end of it. That was it.
Yeah, you're 100% right. And as far as OpenAI is concerned, and Sam Altman, I don't even want to go down that road. But let's just say that it couldn't happen to a nicer guy if it all falls apart.
Well, it's just complex, and I have not been able to study it closely enough to understand.
There's a huge but. Yeah. The but is the difference is, and the WorldCom and Global Crossing are more important. When Global Crossing built out and WorldCom was building out all that fiber optic capabilities,
right?
They admitted, and everyone knew, that at that instant there was only demand for 5%. As it was, in other words, they built 20 times more fiber than was needed at that time, on the theory, expecting, demanding, in fact, needing exponential growth for it to even get to a reasonable capacity utilization in 5 years. Now, it turns out it took 10, and et cetera. But those companies went kaboom because people said, "Wait, you cannot be able to deal with that 5%. That's insane."
And so for the
Right
people
now, we are
but
so under capacity and under power in compute in AI.
Yeah.
It wouldn't matter if OpenAI and ChatGPT literally vaporized, which is, I don't think, what's happening. I think his arrogance is his arrogance. It would have crushed his stock price, yes. But they're not getting vaporized anytime soon. There's still enough capital for them to operate. But even if they didn't, you have XAI, multiple other. There are many, many others, and the demand is huge because it found product market fit immediately.
But when
And
see
we are
people,
under capacity right now.
right.
That
But
difference
when you
matters.
see people like Peter Thiel selling Nvidia, why? Because he
Well, because
remembers.
Nvidia is priced to perfection.
He was there. He remembers this stuff. It's like, if I don't understand it's priced to perfection, it's just too much. So it's a really good point. Does that mean that there's fraud? No, not necessarily. But I remember a woman I worked with at Carlson Capital whose husband was at WorldCom and had all his retirement in WorldCom. They lost everything, vaporized overnight. They lost it all. It was awful.
So Nvidia right now is trading at a PE of 53. That's after today's, a little bit of a drop. 53. It is one thing to buy a growth company at a very high, price to earnings. It is another to buy the world's largest company at a high price to earnings. This is the sort of data that instantiates Mike's signal.
It's pricing out to like 2030 earnings, right? I mean, it's crazy.
Which might very well grow into it because it's a huge trend. But what if, and this is technology, what if other tech creeps in and Nvidia doesn't have the hammerlock that it does now?
That's right.
The bigger you get, the harder it is to grow. It's as simple as that. It's one of those things, trees don't grow to the sky, right? This is, now we're all sounding like Mike here, so we're all putting on our mic hats, but so you can enjoy that.
But this is what the market's trying to digest. This is exactly what the market's trying to digest and figure out.
Mike, you're scratching your head relentlessly over here. I want to know what you think of the quote unquote insider selling, or all of this.
Well, that's just, to me, it doesn't matter who sells. There's more sellers. And that's why a lesson I've tried to learn in the market, try not to figure out the nuances of the inward, work on the macro, bigger picture down. So as you pulled that up, I can show you real quickly. I just pulled up my screen. You mentioned NVIDIA, 50 something times. I pulled up Walmart, 40 times earnings. Okay, it's a retailer. I'm sorry, but I'm just not going to be excited about Walmart at the highest PE in 24 years. And then I tilt over to, I have to just keep pointing out the key thing that you mentioned, James, is Bitcoin is the liquidity indicator. It's one of the toppest one. If you overlay it with gold, it's a much better indicator. And I've been looking at this chart. Bitcoin to gold ratio has broken down. And my point is, I fully expect it to continue breaking down. I mean, I have to admit, I got tripped up a little bit before Trump was elected, but now it's below those levels. And it's the key thing is, if you want an indication now, it's where markets are going now. I just say sometimes it's best to panic first, and that's what's happening in cryptos. And I say any type of bid, hit it.
I hear you, and I get it, and that is a choice for people, whether they're long term, short term, whatever it is. But long term, here's the punchline. What I was trying to say about, we're out of the 4-year cycle. We're now on a liquidity cycle. The liquidity has been tight for a while here. And, even though global liquidity is expanding, it's been a little bit tight here. And next year, I just cannot see liquidity not expanding next year.
So here's how.
See it.
One key thing. Stock market going down. The number one source for liquidity on the planet and biggest amount in history is the U.S. stock market. And the tip of that iceberg is cryptos, and the tip of that iceberg is MicroStrategy, and it's already broken down. It's the bear market. So to me, this is the beginning. That's my job, is to look forward. So I think this is all going to pan out by the end of the year. If it doesn't, then I'm going to have to eat some crow. But it's all pointing that way.
Right. And I do agree that there's a lot of uncertainties, questions about where the Fed is poised, or how they are positioned and what they're going to do.
They'll cut
this next month. There's a big question mark there.
Yeah.
Okay. So we're stopping QT. They've already said it. When do they start adding reserves? We don't know. Is that going to be QE? No, it's going to be QE, not QE. It's going to be, like short-term, Treasury, short-term T-bill kind of purchases, just to keep more liquidity in the system. It's going to be more like a steady stream than a fire hose, But When does the fire hose come? I don't know. Does it have to have a market breakdown to occur? I don't know. Does it have to have a credit event to occur? I don't know. But if any of those things do occur, it's coming. There's just no way around it. It's math. And this is where you and I are aligned on so much of all of this. But one of the things that we're not aligned on is it's not that the Fed has learned their lesson. There's no lesson to learn. It's over. The math is the math. There's no way they can avoid having to create more liquidity. There's just no way. And that's the question. Do you believe that they're going to just draw liquidity out of the system, let the stock market crash, like everything crash, and then deal with the fallout? My answer is no, especially because next spring we're getting a chairman of the Fed that's going to be a lot less antagonistic to this administration than the current one.
So let's remember who appointed the last chairman of the Fed. Mr. Trump. What you get happens when you get into that position. You do not want to go down in history of
not everybody. Not everybody
remember. He doesn't remember doing it though.
Look at what just happened. Look, not everybody keeps a relationship with Trump, and Trump has been hammering this guy for now. It's been years, and so he's beaten down. He made him look like a little boy when he was standing in that construction site, and he handed him that piece of paper and said, "You're over." But it was if that was me and I was the chairman of the Fed, that would be humiliating and infuriating.
It doesn't matter. The only thing that matters is self-interest, and the self-interest now for avoiding a impeachment 2-year cycle from enraged, leftists. The only thing that matters is the midterms. Now he'll may very well lose anyway, but he's not going to do it with any bullets left in the frigging, any arrows left in the quiver. He's going to fire every bullet. And if you don't understand that, you're not paying attention.
So you're not understanding. Here's what you're missing.
If I were him, I would do exactly.
Here's what you're missing. The number one issue in the last election, even the one before, was cost of living and inflation. If you pack the Fed and you get them the ease to get the stock market to keep going up, and those 10% and the 20% who make more money, and the rest of the people who really vote for him are deep in inflation, you're going to lose the midterms and the next election too. It's inflation is all that matters now, and the stock market's the key thing. And Trump has just found the lose-lose.
Mike, the correlation in the stock market and the CPI is virtually non-existent over there.
Only if you go back to 1928 and 29. It's not true. Go back to 1980 in Japan.
No. Sorry, false. Last 25 years, 5 years of that 25 have we had anything other than negative real rates. We've had a massive bullish stock market. It's basically, think of it as a waterfall, a water flow, a big stream. And they basically say, let's push all this inflation into assets away from consumer inflation and do things that are consumer deflationary. The far bigger worry are tariffs and the lack of ability to onshore and the lack of ability to produce. The supply side is where they're going to focus. All their efforts are going to focus on. They may fail. I'm not saying they're going to succeed, but I'm telling you that the school of thought that's running this administration believes what I just said to be true. That's all you need to know.
And then finding out the hard way, when you put in a person in the position where the whole rest of the legacy is going to depend on their name getting this right, like Volcker did, and Mr. Martin didn't, they're going to do just what the rest of the Fed, maybe at first they'll cut, but let's not miss the first. There's a binary model here. First iteration for massive liquidity, fiscal and monetary, is the stock market has to go down. That's the way it works. Let's get through that first iteration first.
Okay. Well, you know what?
And then we go to the next binary model.
The beauty of this is we'll get.
Can we get a third bet?
Because in 10 months we'll get to see.
So Dave won the first bet. Dave won the first bet when it was Bitcoin going to 15 or 40, I think, right?
Yeah, something like
that. But quietly, Mike smashed us in the second bet where he said,
"That's right,
outperform Bitcoin," and we just kind of never brought it up. So we need a third.
No, that's all fair.
Tiebreaker.
I think another way, but when you go through report cards, and we should all be accountable. The reality is if we think that interest rates aren't going to surprise to the downside and liquidity isn't going to surprise to the upside, I think that's going to happen now. The Bitcoin has been delinked from the stock market over the last few months for reasons that are unique to Bitcoin. That doesn't mean that it's delinked if the stock market drops, because there's different sellers. The sellers who own Bitcoin now will sell if the stock market gets crushed. So there is something, there is a dynamic at play here, but time does tend to change these things. I've said this many times. I know we're way over time. Betas and correlations are notoriously unstable for a reason. And so we have to analyze. You can't interpret the delinking as bullish. That's all I'll say. And that is true.
Listen, even if they all go down, I've made this argument 1,000 times. Go back to March of 2020 and COVID. Bitcoin bottomed under 4,000 right before the stock market 12 or 13 days bottomed. Which asset did you want to be in from that bottom? The one that went up 17x to 70,000 or that doubled?
Yeah, right. But
Can't say it'll happen again. But listen, I'm buying all of the dips just in case.
Yeah, I understand. Okay. Well, we have Crypto Town Hall in 8 minutes.
Yeah, we did. That was great. I think this might have been the most people that were ever watching the show. Certainly close. It's amazing what a market crash will do. It's going to be interesting to see what happens with price here. The 4-year cycle debate is never ending, obviously. But James, I definitely default to there's no cycle. And, the people pointed October 6th as the top when the Reddit post said it would be, and that's when it should have topped. But everything else about this has been different. The ETFs made Bitcoin make an all-time high way too early if you believed in the cycle. There was no alt season, which was always a part of the cycle with the filtering down. And 2025 has either been a sideways or bear market when you start zooming back into everything that happened.
And it's going to be more tied to global liquidity and continued adoption. And that's just going to continue to take time, which, that's just reality. It's just going to take time till people understand that it's not, one of 10,000 cryptos, that it's the only one.
Mike, I'm not sure how we're going to be able to do this when Bitcoin's at 10,000, it's going to be very hard for the three of us. 50 would be brutal enough. All right, guys, we do have to go. Thank you everybody for tuning in. Incredible show as always. And we'll see you on Crypto Town Hall in 7 minutes. We're back for Macro Monday next Monday. Thanks everybody. Have a good one. Bye.
That's dope.